there are many automobiles that come from Mexico that actually cross the border back and forth 8 times before the finished good is, because it starts off as an engine, and then this is added, and then the chassis is added, and you're going back and forth and back and forth. Maine has tons of lobsters. They catch the lobsters, they export them to Canada. Canada processes the lobsters, sends them back into the United States. Do you want us to pay 25% more for the Maine lobsters that were processed in Canada? I mean, it's a huge, complicated, interconnected world and global supply chain, and this is hugely disruptive.
You're watching Capitalcosm. My name is Danny, and today's guest is Alex Green, making his debut on the show. Alex, thank you so much for coming on, my friend.
Danny, so happy to be here. Thanks for having me.
Yeah, sure. Alex, for people who may not know who you are, if you don't mind giving us a brief intro and background on your journey up until this point. Who is Alex Green?
All right. Well, that sounds like something I'd ask myself lying in bed late at night. But I actually have 40 years experience in financial markets. I started as a lowly stockbroker in 1985 and worked as a research analyst, a portfolio manager, left Wall Street 24 years ago to write about the markets full time. And I'm currently the chief investment strategist of the Oxtree Club, which is a fellowship of like-minded investors who are trying to achieve and maintain financial independence by earning the best returns they can with the least risk possible. So that's the challenge that faces all investors.
Yes, I mean your knowledge and insights are never more pertinent than they are today, for sure. So I want to let you kick things off with whatever topic is most topical for you. What is on your radar screen right now, Alex? What should be on the radar screen of every investor and also the average person as well?
Right. Well, of course, what's roiling the markets right now, and what is of great concern to investors everywhere, is the Trump tariff policies. And I'm a strong supporter of most of Trump's economic policies. I'm very much in favor of corporate and individual rate cuts, as he wants to extend the 2017 Tax Reform Act. I'm very much in favor of reducing all the regulatory burden on companies, the red tape that they have to deal with. It's such a burden on business. And I'm very much in favor of eliminating the waste, fraud, and abuse in government. But I've been on record consistently as saying I'm not a big fan of tariffs. And I know that Trump is not an economist, but I think he's getting some bad economic advice, because I just don't agree with those who say that slapping tariffs on imports puts America first. And there's a number of reasons for this. I'll start with the fact that, a tariff is a tax, and it's a tax paid by Americans, American consumers, American businesses. And so if you don't like paying more for your Modelo beer or your Samsung TV or your Toyota Camry or the fruits and vegetables in the dead of winter that come from Mexico or the southern hemisphere somewhere, you really shouldn't like tariffs too, because you're going to pay those increased costs. And the bigger problem, of course, as we've learned in the recent days, is it invites retaliatory action from the countries that you put these tariffs on. And then, of course, Trump says, well, we're going to retaliate for the retaliation. And you can see that's how trade wars get started. And investors can look back to the 1930s. The Smoot-Hawley Act was signed by Herbert Hoover, protecting U.S. businesses, supposedly protecting U.S. businesses. And it led to a 25% contraction in world trade and the greatest economic downturn in the country's history. It wasn't the sole cause, but it was a big part of it. And a lot of it is the fact that not only are you paying more for imports, but at the same time, raising taxes is anti-growth. And so it not only are you paying more for imports, it allows domestic businesses that now don't have the international competition to raise their prices. So domestic companies pay more. International companies get their businesses hurt, and as a result, they put taxes on U.S. exports. And I try to remind people that Americans are only 4% of the world's population. That means that 96% of our customers, potential customers and suppliers, are in other markets. And the world is just too interconnected to think that we can slap these tariffs on and all of a sudden everybody's going to buy made in America, because even American businesses, they're importing parts, they're importing materials, importing commodities, and they have to pay a tariff on those things, and they pass the cost along to consumers. And I think it's a big negative. So now let me just say, before we get into this too far, I appreciate the people who say, yes, but Trump is just using this as a bargaining chip. Of course, as every poker player knows, if you're bluffing, you can't let people know you're bluffing. And so yeah, maybe the result of this is they take their tariffs down on U.S. products, and we take their tariffs down on our products. But it's a game of chicken, really, and it's because everybody gets hurt. I do expect some resolution to this. I've been telling my own readers that the worst thing about this is that the market sell-off is that it's caused by Trump's tariffs. And the best thing about this is that the market sell-off is caused by Trump's tariffs, because Trump very much believes that the stock market is a barometer of his success as a president, as the success of his policies. And just like the people who squawked at, if Trump was elected, this would be the end of democracy. And what happens? The market rallies as soon as the results come in. So for people who say, yeah, Trump's tariffs are a good thing and the market keels over, once again, the market is showing you what people think of both of these developments. And the market is certainly slapping these heavy tariffs on our three biggest trading partners as a negative.
So you mentioned the income tax rate cuts that Trump has alluded to at the start of the show. What of the fact that what if we do end up slashing the income tax to zero? Would most Americans be willing to exchange a higher price for goods in exchange for a 0% income tax, or a significantly reduced income tax? Wouldn't that be an equivalent exchange for most people, or a better deal?
Well, of course, I don't think anybody's realistically talking about cutting the income tax to zero. I've heard things about a sales tax being used, which would be something like a VAT, I suppose. But what Trump has promised so far is he's going to extend the tax reductions of 2017. I don't know if we're going to see any. Of course, we don't even have. There's this omnibus bill that they're working on, but we haven't seen the details of it yet to know. But of course, when you take the income tax rates to zero, you collect zero in income taxes, which means it has to come from something like tariffs. But if tariffs cause trade to contract because we're not buying the imported goods, and then other countries are not buying our exported goods, it's hard to say that could replace the trillions of dollars they're getting in income taxes. Now, I'm no big fan of the income tax. I'm happy to look at alternatives. And as I said, a sales tax is certainly an alternative. And it takes all the black market money that's going untaxed. It taxes that. It takes foreigners who are spending money in the U.S. It takes illegal immigrants that are spending in the U.S. They're going to pay sales taxes too. So it's much more thorough way of taxing, but it's also very regressive in that low-income people find it harder to pay a big sales tax than high-income people do. But all these things are on the table. But I think it's too early to say that these tariffs would replace the income tax. In fact, I think what the greatest likelihood is, as the markets crater in response to the fact that Trump wasn't just threatening these tariffs, but is carrying through with them, is that the pressure builds. I mean, I bet you his economic advisors are getting an earful right now. And as the markets go down and Trump goes, I think it's likely that we're going to reach some kind of accommodation fairly quickly. Mexico, Canada, and China don't want to lose the U.S. market. We don't want to lose market share in those countries, and nobody wants to see the stock market cave in. So I think that's the best part of this is we know there's a specific cause of the market sell-off. We know it was the tariffs. If something is done, if some agreement is reached with these countries, and I think that everyone would be happy to come to some kind of quick compromise and call to win on all sides, and that would be good for the stock market, good for Trump. And that's what I foresee is likely to happen in the days ahead.
It was reported last night after the State of the Union that Commerce Secretary Lutnick said that there may be a compromise coming down the pike in the next, perhaps today or in the next couple of days regarding the Mexico-Canada tariffs.
Right.
What terms need to be met on the part of Canada and Mexico for these tariffs to be lifted, as far as we can tell?
Well, that's really up for the Trump administration to decide. I think that since both sides are going to want to get a deal done, if Mexico says, hey, we're going to completely block the border, we've got a fentanyl czar now, like Canada has. They do everything they can. I mean, Trump says it's about the border, it's about drug smuggling, it's about other things. Other times he talks about just straightforwardly about protectionism. As if U.S. businesses aren't good enough to compete in international markets and to be protected from foreign competition. I just don't believe that. And for instance, we've already had these companies. Walmart's warned sales are going to drop. Target warned sales are going to drop because of tariffs. Best Buy warned sales are going to drop because of tariffs. We're already seeing, and the sad thing about this is it takes a lot of time to set up supply lines, and a lot of these imports from Mexico. I mean, people think of Mexico, oh, they're sending us avocados and tomatoes and whatever. Mexico is exporting automobiles, medical equipment, electronics. A lot of big firms who saw that the writing on the wall about China, which is a trading partner of ours, but is also a geopolitical enemy of ours, unlike Canada and Mexico. They started setting up operations in Mexico to get around the problems with Canada. And this is after Trump renegotiated NAFTA back in his first term and was satisfied with the deal. And so companies say, okay, we'll manufacture in Mexico where costs are low and they've got a free trade agreement. And now that's off the table. And there's $1.5 trillion of imports we're talking about here. It's a big deal. And it's up to the Trump administration as to what they will accept in concessions from Canada, from Mexico, and to a lesser extent, China. But China is being very tough. Already said that, for instance, Illumina is the world's biggest maker of gene sequencers. It's a very high-tech, important business. And they've said, we're not only are going to put a tariff on them, we're not going to let you sell the machines in China. So its stock is cratered from $150 a share to less than $100. So it's I think the damage is pretty wide-reaching. And again, this is coming from a person who actually likes most of Trump's economic policies, who's counting on Trump's reforms, tax reforms, regulatory reforms, reforms of government waste to make the economy better, make corporate profits better, and make the stock market perform better.
In the world of precious metals, trust is everything. It's key. And over the course of the last few weeks, I've gotten a chance to meet the good folks over at Pembex, and I've got to say, they have got great character, and they're someone that I can put my trust into. Now, Pembex offers ultra-competitive prices, top-tier service, and fast and secure shipping. All the things that are important for gold and silver stackers. Thinking about a gold and silver IRA conversion, they've got you covered there too. And don't just take my word for it. Check out their top-tier third-party reviews and see why so many stackers have trusted Pembex. And so for all of your gold and silver needs, head on over to Pembex. That's PIMBEX.com. Link is in the description as well as on the screen here. Alex, if given enough time for these tariffs to play out, let's suppose we do the tariffs, we take it to an indefinite amount of time, wouldn't the U.S. become more self-sufficient given enough time and I guess punishment as well, pain in the process? But wouldn't we start making more things at home? What if go ahead.
Yeah, we would. There's no doubt of that. But there's a line that Dave Chappelle uses in his stand-up when people start squawking about outsourcing. He says, I want to wear Nikes. I don't want to make them. And that's the thing. A lot of these low-skilled jobs that are being done overseas by low-skilled people who are paid low wages, you would be stunned if your phone, if your Apple iPhone was made in the United States by someone getting $50 an hour plus benefits, you would be astounded at what things would cost. So when people say they're pro-tariff, I really wonder, if they know what they're talking about, because the cost of everything, the cost of making these inexpensive things overseas is going to soar here. And certain things, I mean, you simply can't get fresh berries and vegetables in the dead of winter in the United States, except that they're imported from other places. So I look at the fact that this election we just had was very much decided probably primarily about rising prices, that people were sick and tired of going to the grocery store, couldn't believe what the checkout bill was, rising prices. They're estimating that the average truck or SUV would go up by $9,000, that the cost of fruits and vegetables would go up 25 or 30%, that all sorts of things. And again, we're buying. I have lots of friends that drive BMWs, Porsches, Lexus, whatever. I mean, people like their foreign. They drink Heineken beer, they drink Modelo, they buy Samsung TVs. Can you imagine if your flat panel TV was made in the United States? I mean, you can buy a beautiful large screen flat panel TV at Walmart for $300. That simply isn't possible in the United States. And so, yeah, to the extent that Trump can get, excuse me, to the extent that Trump can get foreign companies to set up manufacturing operations here, and one of the reasons they can do that is because automation and robotics has come so far. You're still not going to go back to the 1950s with assembly line workers sitting there putting one part on one piece and passing along and one part on one piece. That those days are over, because again, when you pay someone $50 an hour, the cost of automation, which runs 24/7, doesn't take bathroom breaks, doesn't take days off, doesn't take vacations, it simply isn't possible to reduce costs that much. And this is the thing I think that Americans sometimes fail to understand. Everybody likes to buy American. I like to buy American. But when you go in a store and there's two similar products and one is 50% more expensive than the other, people don't go, well, this 50% more expensive one was probably made in America, so I'm going to buy it. They buy the less expensive one, especially because the foreign products are smart enough not to have, strange sounding foreign names. They sound like it was made in the United States. So, and people just don't look that closely into what they're what they're buying, where it was made. And for instance, there are many automobiles that come from Mexico that actually cross the border back and forth 8 times before the finished good is, because it starts off as an engine, and then this is added, and then the chassis is added, and you're going back and forth and back and forth. Maine has tons of lobsters. They catch the lobsters, they export them to Canada. Canada processes the lobsters, sends them back into the United States. Do you want us to pay 25% more for the Maine lobsters that were processed in Canada? I mean, it's a huge, complicated, interconnected world and global supply chain. And this is hugely disruptive. Even the little bit that he's done, I mean, the market's kind of wavering. It's sold off, but it's wavering. Like, Trump can be very surprising. He could put these tariffs on and then take them off quickly, as he did initially with the Canada and Mexico tariffs. He put them on, the market caves in, and then of course he takes them right back off again. Then he slaps them back on. And part of the problem here, if he were to say, for instance, that if Canada and Mexico don't do X by May 1st, we're going to slap these tariffs on, and give both sides sufficient time to negotiate it before the tariffs hit, that's one thing. But to just slap them on and then everybody's got to deal with the aftermath is tough for business people to adapt to.
What do you think he's trying to accomplish there with Canada and Mexico? And more, let's start off with Canada first. He started off negotiations or talks with Trudeau by calling Canada the 51st state, calling him a governor of Canada. There was no mention of the 51st state last night at the State of the Union.
Right.
So,
well, that joke is getting a little. that 51st state joke is getting a little tired. I think that's why it was. And also, I think people think he's done enough to antagonize Canadians. I mean, when the Canadians start booing when our national anthem plays, maybe we've gone a little too far on that front. But I think Trump is sincere. He wants to fix the immigration problem. Good for him. He wants to fix the fentanyl problem. Good for him. but protecting U.S. companies from foreign competition, not good for him, because American companies should be good enough to beat the foreign competition. And people can say, well, yeah, except they build these things in these countries where they're paying people $1 an hour, or in some cases $5 a day or whatever. Yeah, but really, are they really doing such unskilled work that there's tons of? I mean, we can't find Americans to clean hotel rooms and pick oranges and apples and work. I've got a friend who's a construction worker. He says, I simply cannot find enough Americans who are willing to work that hard in the hot sun all day. I've got to hire these people who've come up from Mexico and elsewhere, or the job wouldn't get done. So I think he is sincere. And there's nothing wrong with trying to fix immigration, illegal immigration, and trying to fix the fentanyl crisis. But imagine if you're a business owner and you're just trying to please your customers and your shareholders, and all of a sudden, because of the fentanyl problem, the goods you need to manufacture what you need from Canada now costs 25% more, or from Mexico. It does throw a huge wrench into things. And again, the world is so interconnected. It's hard to say how all this would play out. But I do know that when you have a trade war, there are no winners. It's mutual assured destruction. When you slap tariffs on other countries and then they slap retaliatory tariffs on you, and then you retaliate for those tariffs, that is not a good thing for business. And in a perfect world, we would have, totally free trade with no impediments whatsoever. But we don't live in a perfect world. And people, Trump is under political pressures. Democratic leaders in other countries are under political pressures. Everybody wants to protect and support their domestic businesses, but you can't have everybody win. And the best way to do this is to let them fight it out in the free market. Because here's the key: in a free market, in a capitalistic society, all economic transactions are voluntary. If you don't want to buy a certain product or service, don't buy it. If you don't want to supply a certain company because of its policies, don't sell to them. If you don't want to own a company's shares, don't own them. It's all totally voluntary. When Trump says that all these countries are screwing us over, American consumers and businesses are voluntarily choosing to buy foreign cars, foreign machinery, foreign parts, foreign groceries. And so it's just not as simple as it's better if we make it and buy it here in America. I wish it were. And there's been a lot of talk about back during McKinley's term, which was really almost pre-industrial revolution, when most Americans didn't have electricity or indoor plumbing or automobiles or anything, and the tariffs weren't that damaging. But we weren't nearly as interconnected a world then as we are now. So it's very different today, and that's why I used the analogy of what happened with the Smoot-Hawley Act in the 1930s. Is it had a devastating effect on world trade. And I think Trump is smart enough that he's not going to let it go that far, that as quickly as possible, they're going to say, well, Mexico did what we wanted, Canada did what we wanted, it's the tariffs are down. And it can't happen soon enough in my view.
We mentioned the inflationary impacts of the tariffs earlier on, but when you really think about it, wouldn't it be more so stagflationary? Because sure, prices would go up, but by virtue of prices going up, wouldn't you also have less buyers for that product as well? So you'd create deflation on the demand side, but inflation on the supply side.
You're right, but then ask for a show of hands. Who wants stagflation? I mean, stagflation is stagnant growth and high prices. If we have a mediocre or weak economy and prices are going up, people aren't getting raises. They're going to the store. They're seeing that things are more expensive. So I don't. Not that I expect an inflationary spiral. Quite the opposite. As I mentioned, in the Depression, U.S. GDP and the world economy contracted 25%. I mean, people stood in bread lines. And I don't think I don't mean to fearmongers. I don't think it's going to go that far, because I think Trump is a businessman. He understands this. He's not an economist. I do think he's getting some bad advice. Whoever's pushing him to raise these tariffs are a good thing, whatever. As I said, you can see the market's reaction to these policies when stocks roll over like, uh-oh, sales are going to be down, earnings are going to be down, and so share prices are going to be down. It's just not a good thing. If you're an equity investor, you can't be excited about the market's reaction to these tariffs. And yeah, it may not be hyperinflationary like we saw in the early 80s, but stagflation like we had in the 70s is not good either. So I'd like to avoid both by getting back to a more free market situation.
Alex, if you were Trump's economic advisor, what would you advise him right now? Like if you could give him like 3 or 4 or 5 key points, what should he be focused on?
Well, as I said, I actually like most of the Trump agenda, extending the 2017 Tax Reform Act to keep taxes low for corporations and individuals. That's good. Why is it good? Because if a company has more money to spend, it can hire more people, it can pay more wages and benefits, it can do more R&D, it can expand its distribution channels. It's got money to spend all sorts of things because they're paying less in taxes. And the same thing for individual consumers. When your household is paying less taxes, you've got more money to spend. That's good for the economy, good for your household, all good. The deregulation. I was talking to a bank president the other day who said that he's hiring more compliance officers than loan officers because it's so tough to try to keep up with all the regulations. And yet, if you don't keep up with them, you find that you inadvertently have failed to meet these regulations and you're subject to all kinds of penalties. And so as a result, people are not getting loans because there's less loans on offer. The ones that aren't on offer are more expensive because of the higher cost of complying with these regulations. So again, deregulation, good. Waste, fraud, and abuse. I don't even know why the Democrats are up in arms about that. I mean, Bill Clinton, Barack Obama, lots of Democratic presidents were all in favor of rooting out waste in government, which there is a ton of it. I mean, there's a ton of waste in the private sector, but in the private sector, for instance, the Oxford Club, our fortunes have waxed and waned over the years, depending on the markets. You know, when the markets are up, everybody wants to read our investment advice. When the market's down and people aren't investing, they're less inclined to. And so as a result, our staff has risen and fallen based on our economic fortunes. But with government, there's no incentive to economize. There's no profit to be had if you do things more efficiently. So really, I would tell them that your economic advisors are giving you good advice on every front but the tariffs. That's my stand. And I know that there's some people out there that are pro tariffs, but as I said, you can see the market's reaction to what's happening. And most business people and investors are saying not good.
What is the pro tariffs argument? Well, what would a pro tariff economic advisor say to convince Trump that it wasn't?
Okay, so if the thing is, you have to stop thinking like a chess player instead of thinking 6 moves ahead. Like, you know, if you just think, okay, we're going to slap these tariffs on them, and as a result, they're going to do exactly what we want. Well, we can see already that's not been the response. You know, so you can say like we're gonna bully them into doing what they should be doing, which again, you know, securing the border, I'm all in favor. Getting rid of fentanyl, I'm all in favor. Although I will say that, for instance, the fentanyl problem is primarily a demand problem. I wish our schools would teach that you are absolutely crazy to go anywhere near this stuff instead of there being this huge demand for it, because not like they're having to talk people into buying fentanyl. That's surprising to me that so many young people want fentanyl. But leaving that aside, I just think that what Trump's advisors need to do is to get him on a pro-growth path, because when you say, what's the argument for tariffs? Okay, you could say that in a perfect scenario, we put on a tariff, and as a result, American consumers are less likely to buy Modelo beer. They start buying Bud Light again or whatever. And as a result, American business benefits. And to the extent people want to buy Modelo beer still, you're going to pay a tariff. And so the Treasury takes in the revenue. So you could say from that standpoint, we raise the revenue on the tariffs on the imported goods, and the American business, Budweiser, Anheuser-Busch, benefits. But it doesn't really work that way. The problem is other countries, they are dependent on the U.S. as an export market, but we're also dependent on exporting as well. I mean, remember, it's not just a matter that Americans buy imported goods. American companies are multinational. We're exporting all over the world. We're trying to take over the world. Look at the Mag 7. All those companies, you know, Apple is selling phones in China and Europe and South America and everywhere else, and Facebook is global, and I mean, Google is global. They're all trying to conquer the world. And that's why I started off by saying, look, the U.S. is big. We're 1/4 of the world economy, but we're not the whole economy. And you can't neglect the fact that 96% of our potential customers and suppliers are outside the U.S. And here's the thing, Danny, that I think a lot of Americans don't recognize. Let's just say you're a restaurant owner and you're dealing solely with local business, and you're pro-tariff, pro-America, whatever. Okay, you're thinking it's not going to affect your business anyway. It is going to affect your business. First of all, as I said, the fruits and vegetables are going to go up 25%. The Argentine beef's going to go up 25%. I mean, who knows? There's no tariffs on Argentina now, but who knows where we're going with this? First of all, your costs are going to go up because of the cost of imported goods, but then also you have lots of customers that work for multinational companies, and if they're laying people off or not giving raises, or it's suffering, then your business is going to suffer. So even though it might seem that you've got a local business that deals exclusively with local people, it's still going to negatively impact you. And see, right now we're only a few hours into these tariffs, and so it's just too early to tell. Trump can be very unpredictable. He can slap the tariffs on, he can pull them back off. It's hard to know how much he really believes in tariffs versus he's just a bluffer, and he's saying, I'm going to tariff you, and if you tariff us back, I'm going to put more tariffs on. Well, that's a bluff, but whether it's credible or not remains to be seen, because other countries don't want to be seen as weak. I mean, other leaders don't want to say, oh, they slapped us with these tariffs, so guys, we're going to have to do this or that. To the extent that they're doing things they should be doing, like policing the border on the Mexican side and doing something about the fentanyl that's coming in really from China, but through Mexico, they should do something. But let me just say that with Canada, for instance, you could take all the fentanyl that was seized on the Canadian border last year and put it in a carry-on suitcase. So if you're a business owner and all of a sudden your costs have gone up 25% because of the tariffs on Canada, and you're going like, what have I got to do with the fentanyl crisis? Why am I paying such a big price for this? So there's all sorts of ramifications. And I just think that the arguments for tariffs really, when you think them through, when you think like a chess player, they really don't work. And that's why, because I think Trump is a smart enough businessman to realize that as the market wilts and as he hears nothing but flack from business people who are negatively affected, there will be a positive change going forward. So I remain optimistic that most of Trump's policies, the tariffs accepted, will be positive for the U.S. economy, for corporate sales, and ultimately profits. And then, of course, share prices follow earnings.
Yeah, and you mentioned the markets here, so let's dive into that. What is your general prognosis right now as it relates to the markets? The markets are selling off because of this tariff talk. What do you make of the current movement in the broad market?
Well, aside from the tariffs, I see lots of positives out there. Inflation, while still too high, is coming down. GDP growth has been stronger than expected. I actually pointed out all last year that the U.S. economy was doing better than Trump was portraying it, but he was running for office, and so he was trying to make the strongest case he could for change in leadership. Corporate profits have come in ahead of expectations. Mostly, we're at the end of the fourth quarter earnings season. Over 95% of the companies in the S&P 500 have reported fourth quarter results, and they're mostly beating expectations. And what drives stocks higher in the short term is not just meeting, but exceeding the estimates of Wall Street analysts. And when companies report what's known in the business as a beat and raise, they tell you that they beat the estimates for last quarter, and then they raise their outlook for the current quarter or the year ahead. That's what causes stocks to go higher. And in fact, I often tell people, they say like, gosh, the company reported a 50% increase in profits and the stock sold off. That's because the market was expecting a 70% increase in profits, and so it was a disappointment. Or maybe they reported a 70% increase in profits when people were expecting 50%, but then they said the rest of the year was going to be flat, and it will still sell off because investors are always more interested in what lies ahead than what lies behind.
Right.
So I think low inflation, strong GDP growth, rising corporate profits, and the positive effect of tax cuts, deregulation, and getting rid of this government waste is really a positive thing for the economy. And what's positive for the economy is positive for share prices. So I'm actually pretty optimistic about the outlook for U.S. equities, especially if Trump repeals his tariff policies.
Do you see a scenario where we start seeing an influx of capital come into the U.S. from places like Europe, which are in much more dire straits than the U.S., as the world? Because yes, we do have problems within our border. We have inflation, but that's coming down, as you've alluded to. But so does the rest of the world, and in worst cases, for the most part. So, is there an event where is there a scenario, or is there already in place where capital is flowing into the United States as a form of a safe haven? And you can kind of see it with a Dow beginning to, I believe that's the indice that captures foreign money coming into the United, because foreigners don't invest in the Nasdaq, they don't invest in the S&P, but they do invest in the Dow.
Right.
What do you make of a scenario where, yes, the United States is in bad straits, but then everyone else is much worse, so all that capital comes in to the U.S.?
Right. Well, first of all, it's important for everybody to understand that the United States doesn't just attract the most students and the most immigrants of any country. We also attract the most foreign investment capital. And investment capital goes where it's treated well. United States, we have a stable democracy. We have the rule of law. We have pro-business policies. And as a perfect contrast to this, foreign money is hemorrhaging out of China and has been for years because of the heavy-handed communist dictatorship there, which people not only feel like is not conducive to business, but totally unpredictable. I mean, they'll clamp down. For instance, a few years ago, they clamped down on Chinese tutoring companies because they thought the whole business was a scam. Of course, Chinese parents want their kids to do well in tests and get into elite colleges and so on, just like American students. It didn't make any sense whatsoever. And when they clamp down on foreign companies and try to steal their technologies, don't respect patents and intellectual property rights, it drives people away. And so every country, they're competing for foreign investment capital. And to the extent that you can offer them a safe haven, as you mentioned, democratic stability, a growing economy, a strong currency, low interest rates, low tax rates. I mean, we have one of the lowest corporate tax rates, and Trump wants to take it lower still. That attracts companies. I mean, just to give an example, I have a friend who was a top executive with a company that is based in France. And he says, look, he told me over dinner one night, he said, I would never say this publicly, but we are not going to hire any more French employees. We're not going to expand within France. It's too expensive. It's too time consuming. It's so bureaucratic. It's such a nightmare to do business in France that they said they were moving their operations to Ireland. So again, all these countries are competing for capital, and the capital goes where it's treated well, because if you have a lot of money, you can just say, like, for instance, I personally, I've invested in China in the past. I'm investing no money in China because I've had it with the Chinese government, which, first of all, is no friend of ours. But also, when you look at this alignment of China, Russia, North Korea, and Iran, here's 4 countries that have very little in common. I mean, Iran is nothing like North Korea, and North Korea is nothing like Russia, and Russia is nothing like China. What is it that ties them together? They're all autocracies that don't trust their own people, that don't give them the most basic human rights, like criticizing the government or even voting for a new government, except for their hand-picked candidates. And so what do investors do? They don't favor investing in those countries. If you invest in Russia, you find that your investment gets confiscated. You invest in China, you find that they change the rules. So the U.S. is attracting capital with its pro-business, pro-democracy, pro-stability policies, and that's why we already are the biggest magnet of foreign investment capital in the world.
Is that what he's trying to do with these golden citizenships? I think it's like $5 million for a citizenship to effectively brain drain the best and brightest out of the rest of the world.
I think it is, and you know what? Most Americans, most well-informed Americans, are pro-immigration. What they're anti is illegal immigration. The idea of millions of unvetted people coming across the border, it's nothing to do with being anti-Hispanic. It's got everything to do with, if we're this magnet for the world, and we are, people are knocking down the doors to get in. Why not bring in doctors and nurses and engineers and pilots and people with a high degree of skills? And whatever Trump can do to incentivize that, I'm 100% in favor. And already, for instance, in Europe, you've got a lot of doctors coming to the United States because they've got socialized medicine over there. You can be a doctor who works long hours. You got a lot of education. You went through residency. You've done everything, and you're making $65,000 a year. And they can go, I can come to the United States and make $250,000 a year. And so they do it. So anything we can do to incentivize educated, skilled, motivated people to come here. And I know that some of the people coming across the southern border, they are motivated. They will find a place and make successes of themselves to support their families and get ahead. But you bring in all sorts of other people who don't intend to work, or who don't have the skills, don't speak any English, don't have any education, don't have a place in a knowledge-based economy like this, and they become a drag on the economy rather than a plus. So anything that Trump can do to incentivize highly skilled people to come here and live and work, I'm very much in favor of.
Gotcha. Well, that's all I got here, Alex. Anything else you want to talk about before we, look at the rebirth of the American Dream event you got lined up, and any other thing you want to plug as well?
Well, I will just talk briefly. I am writing my 6th book right now. It's called The American Dream: Why It's Still Alive and How to Achieve It. And I have to say, with my previous 5 books, I couldn't tell you the moment at which the inspiration hit to write that particular book. But this one had a very specific genesis. And then I read the polls that came out last year that show, and this is not just one poll, this is multiple polls, between 2/3 and 3/4 of Americans don't believe the American dream even exists anymore. And I find that astonishing. I say early in the book, I'm still working on it. The manuscript's due in May, but it would come out later this year. The way I view it is that this nation is based on 3 principles, 3 pillars. The first pillar is the Declaration of Independence, which declares that we are a free people with natural rights. The second is the U.S. Constitution, which protects and secures those rights primarily through limited government. And the third is the American dream itself, which is how we pursue we exercise our right to pursue happiness. And so if those 3 pillars don't exist, then we're not only not the same nation, we're not the same people. And so I write about this all the time. I try to show people that the principles of wealth creation are well known, but that doesn't mean that most people know them. They graduate from high school and they don't know how to calculate compound interest, or what a 401k is, or the advantages of a fixed rate versus an adjustable rate mortgage. And then they go off to college, and their professors tell them we live under this unfortunate economic system called capitalism, which is based on selfishness and greed and exploitation. And it's such a mischaracterization, which if you give it even a moment's thought, you realize how ridiculous this is. Because, for instance, selfishness. Yeah, we're all self-interested individuals, but you don't get rich thinking about yourself. You get rich thinking about other people. What do they want? What do they need? How can I get it to them faster, better, make it longer lasting? That's how you get ahead. Greed. I could be the greediest person in the world. No amount is enough. But yet no one is going to give me a dime until I provide them with labor or a product or service that they're voluntarily willing to pay for. So greed doesn't
exploits essentially your greed, because I said capitalism exploits one's greed.
Right.
Yeah.
It takes your natural self-interest and your natural desire to have a nice home and a nice neighborhood and nice things and take nice trips, and it harnesses that because capitalism says you can have whatever you want if you just provide enough other people with what they want. So anyway, I write about the American dream and how to go about achieving it. And if your viewers would visit oxfordclub.com, they'll see a picture of me that's posed with a longtime subscriber of mine, Bill O'Reilly. He's taken my investment ladder for over 20 years. And we have a promotional event where we try to invite people to take my newsletter called Restoring the American Dream. And as I said, I'm writing a book on the subject now. So that's really, what I think it's all about is money in itself is worth nothing. You have a pile of $100 bills, it doesn't do anything for you. It's only to the extent that it can improve your life that it really is of value. So that's the American dream, and getting there requires working, saving, investing, and compounding, and that's the part that I specialize in.
Yeah, we have a link to that down below, guys. So be sure to check it out if you're interested. Alex, this has been a fascinating interview. So glad to have you on. Thank you for coming on. Anything else? Is that anything else you'd like to plug before we wrap up here? Or
nothing to plug. I'm really, you know what? I retired from Wall Street 24 years ago, a wealthy man. I'm really just interested in showing other people how it's done. And to the extent that people like what I have to say and are interested in learning more, great. If not, that's fine too. I'm happy to help the people who are interested.
Awesome. Well, guys, if you enjoyed this podcast, be sure to give us a like and comment. Go, Alex, go in the comment section. If you disagreed with anything, do let me know as well. I do read the comments, so I'm interested in getting your thoughts and perspectives here. Also, subscribe to us on Substack so you don't miss an episode. Subscribe to us here as well on YouTube so you don't miss an episode here as well. But if you subscribe on Substack, you do get early access, ad-free versions, and uncensored versions of my interviews that warrant it. So with all that said, thank you guys for watching, and I will catch you in the next episode. Bye, y'all.